Come on, guys. Let's now do illustration number 1 from Redemption of Debentures. This is the question from our ICAI study material. Start reading the question. Following balances appeared in the books of a company. Read the last line first so that you'll understand what are they expecting from us. Write up concerned ledger accounts, excluding bank transactions, ignoring taxation. So they basically want us to open ledger accounts. But how will you do ledger without journal? You have to think of the journal and do the ledger. Whatever is happening in our mind, no, that thinking process, I'll put it on the paper. Basically, I'm telling you, though they're asking just ledger, I'll make you write journal entry and then ledger. But if the same question comes in the examination, you do only ledger account. Just to make you get that confidence, I'll make you write journal entry and then ledger. Is that fine with you all? So to begin with, we'll not focus on ledger accounts. We'll only think of journal entry. Is that fine? Let's start. The following balances are there. Or do you want me to do both together? Journal, ledger, journal, ledger, journal, ledger. Journals first. Okay. So as on 31st of December 2021, there is 6% mortgage debentures of 10,000. Okay, 6% mortgage, 10,000 debentures of rupees 100 each. So there are 10,000 debentures and each debenture is rupees 100. So we have to maintain 10% of this as TRR. Do you agree with me? Take your calculator, do 10,000 into 100. 10 lakhs. That is the nominal value of debentures. Did everyone get 10 lakh? That is the nominal value of debentures. How much DRR should be maintained? 10% of what nominal value? To 10 lakh into 10%. 1 lakh has to be maintained in TRR. 1 lakh has to be maintained in TRR. Everyone got that? Continue reading. Oh, DRR is already there for redemption of debentures. How much? How much is there? How much should be there? So DRR should have been 1 lakh. DRR is there only to the extent of 50,000. So shall we create the balance of 50,000 DRR? When we create balance 50,000 DRR, DRR account should be credited by 50 and debit will be P&L or general reserve, whatever reserve is there. So I would write the entry as profit and loss account debit to debenture redemption reserve 50-50. How is it 50? 10 lakh debentures. Sorry, 10 lakh rupees. That is 1 lakh, 10,000 debentures into 100 each is 10 lakh. Nominal value of total debentures. Multiply that with 10%. This is the extent to which DRR should be maintained. From that, deduct 50,000, the extent to which DRR is already there. So this is the DRR that we created. Got this? Yes. Now, continue reading the question. Investments in deposits with a scheduled bank free from any charge or lien. Basically, they're trying to tell they've invested money in TRR investments. How much have they invested? 1 lakh. Now, we have 10,000 debentures of rupees 100 each, which comes to 10 lakh. This is a nominal value of debentures. Of this, 15% has to be maintained in DRR investments. You do 10,000 into 100, 10 lakh into 15%, 1 lakh 50. How much is there in DRR investments? Do you have to make any further investment? No. You should have had 1 lakh 50. There is 1 lakh 50. There is no need of creating further DRR investments. But interest rate, they've told, be little cautious, interest at 4%. This DRR investments will be held till the date of redemption. On the date of redemption, you will sell these DRR investments. Before sale, you will receive interest till that date and then you will sell. Before you sell the DRR investments, you will receive interest at 4% for the period that you held and then you will sell. You use that interest money and sale money to redeem your debentures. But again, before redeeming debentures, you will pay interest till the date of redemption. On the investments, you will receive interest till the date of selling. On the debentures, you will pay interest till the date of redemption. Understood? Continue. Bank balance is 90,000. Okay. Interest on debentures has been paid up to 31st December. So everything has happened till 31st December. Here on this DRR investment is there, no? 1 lakh 50. On that also they received interest till 31st December. And debentures also they paid interest till 31st December. So we are starting everything on January. They told here, see 31st December closing balance. Basically beginning of the accounting year is 1st of January in this question. So if they do redemption in May, we'll do 5 months interest calculation. If they do redemption in March, we'll do 3 months interest calculation. But they've done redemption when? 28th of February. So now we have to first receive interest for 2 months on our DRR investments. then sell our investments, then pay interest for 2 months. Then we will redeem debentures after the 2 months of interest payment. Shall we do that? First, shall we receive interest for 2 months on this 1,50,000 what we held as DRR investments? 1,50,000 into 4% into 2 by 12. 31st December tak we've received interest. January, February, 2 months of interest. 2 by 12. 1,50,000 into 4% into 2 divided by 12. 1,000. So let me write here bank account debit to interest on DRR investments. 1,50,000 into 4% into 2 by 12. You get 1,000. Interest is received. If you received this on 28th February, you are doing this also on 28th February, just before redemption. Then let me go ahead and then sell my investments. They have not told anything, yeah, as to how is it sold. Have they given? Oh yeah, investments were realized at par. What is the value of investments? 1,50,000. You sold it at par, meaning cost to cost. Your cost is 1,50,000. You sold it at 1,50,000. No 1 rupee profit, no 1 rupee loss. What is the entry when you sell? Bank account debit to DRR investments. Being DRR investments sold at par. How much? 1,50,000, 1,50,000. You received interest and then you sold the DRR investments. Now what do? You pay interest and then redeem the debentures. Shall I pay interest on 28th of February on my debentures? Debenture interest is an expense. Debit it. Credit bank account because money is going up. What is the nominal value of debentures? 10,000 debentures into 100 rupees per debenture. 10 lakh. Multiply that with 6%. That is for entire year. We last paid interest on 31st December, January, February. 2 by 12. 10,000 is the interest that I should pay. Shall I tell once again? 10,000 debentures. Nominal value 100 each. Take 10,000 debentures into 100. You get 10 lakh. Into 6%. You will get for entire year. Into 2 by 12 for January, February 2 months. Why? Interest was last paid till 31st of December. We are doing redemption on 28th of February 2022. January 2022 February. 2 months of interest. Shall I pay interest for 2 months? 10 lakh rupees nominal value multiplied by 6% multiplied by 2 by 12. What did we get? 10,000 interest paid. Now my debentures are ready for redemption. Shall I redeem my debentures, guys? Say something. First, I'll transfer that interest to P&L. 10,000, 10,000. This is expense, no? I should transfer it to P&L. I have transferred it. Then let me write on the same date. Debentures are decreasing. Debentures has to be debited. Nominal value 10 lakh. Is the debenture redemption at par or at premium? We should read the question. Read. And debentures were paid off at 101. Nominal value 100. Redemption value 1 rupee premium. Nominal value of these 10,000 debentures is 100. Redemption value is 101. So we are paying 1 rupee premium. We are paying alva. So I would write here 1 rupee premium also. 10,000 debentures into 1 rupee per debenture. How much does that come to? I will debit it premium on redemption of debentures and I'll credit debenture holder account. How much? 10 lakh 10,000. Everyone's clear. Shall I make the payment? When I make the payment, entry is debenture holder account debit to bank account 10 lakh 10, 10 lakh 10. Khatam. This premium, if in case it was not made provision for all these years, we have to transfer to P&L. If this was not made provision for, I'll transfer. If this was made provision for, I'll not transfer. They have not given any information. Safer side, I will pass one entry P&L to premium 10,000, 10,000. If they've already recorded this premium on redemption of debentures at the time of issue by debiting loss on issue, and if that loss on issue of debentures is transferred to P&L account over the debenture period in outstanding debenture ratio, already done, then I don't have to transfer to P&L again. I don't have so much information. I have only limited information. So I wrote this entry. But this entry need not be written. You can skip this. You can skip this entry. Amele. Now, debentures are also paid. Now, DRR is no longer required. We had created DRR. No longer required. How much DRR had we created? We created DRR of 50. Already there was DRR of 50. Together, 10 lakh, 10%. 1 lakh DRR is there, which is no longer required. There is DRR for 1 lakh, which is no longer required. What will I do? Reverse. Shall I reverse? Entry will be DRR account debit to general reserve 1 lakh, 1 lakh, Khatam. This is the accounting entries which is not asked for this question. Yeah, you copy this, then I'll teach you ledger. Copy. Come on, let's now do ledger. So when we're solving ledger, we'd have to revisit every journal entry and post it at the right place. See the question once again. To begin with, 6% mortgage debentures, 10,000 debentures of rupees 100 each. This is a liability. Closing balance as on 31st of December. This will become opening balance as on 1st of January. In liability account, opening balance will be on which side? Very good. I'll open 6% mortgage debenture account 1st of January 2022. I'll write by balance brought down. How much is it? 10,000 into 100. I would write 10 lakh. Okay. See the next item. DRR. How much is the balance? 50,000. DRR is a reserve. Reserve is again a liability. It's capital item, equity. Again, opening balance in DRR account on 1st of January 22 will be on the credit side, 50,000. Done. After this, I have investment in deposits with a scheduled bank. This is our DRR investments. How much is it? 1 lakh. This is an asset. Asset opening balance will be on the debit side. I will write DRR investment account. DRR. I'll write on the debit side 1st of January 2012. To balance brought down 1,50,000. DRR investment account to balance brought down 1,50,000. Got it? I've made a note here that interest is at 4% and interest is given on 31st of December last. So the date we sell, till that date we need to receive the interest. Then interest at 4%, 31st December. That's what I noted. Bank balance with the company. Opening bank balance is 9 lakh. I'll open one bank account. I'll write debit side, balance brought down 9 lakh. I've written all the balances. Interest is paid on debentures also lastly on 31st of December. So I'll open one debenture holder account and premium account and debenture interest account. This I'll tell you later as how will it come and then what will be posted there. Now they are going for redemption of debentures on 28th of February 2022 by sale of investments at par, and debentures are redeemed at 101. That is 1 rupee premium, and together with accrued interest. We are going to pay them interest as well. Question is there. Ready? Now let's start with ledger. I'll do one ledger at a time. Now my DRR should have been maintained at 10% of 10% of debentures outstanding. Debentures outstanding is 10 lakh. You multiply it by 10%. 1 lakh. 1 lakh should have been there in my DRR. But how much is there? Only 50. So I create further 50,000 worth of DRR. 50,000. Check the entry that you had written. You had written P&L account debit to DRR. So in DRR account I wrote by P&L. First entry. Isn't that the first entry that you wrote? You keep your journal entries open. I'll show you the ledger postings. So the first entry is P&L account debit to DRR. In DRR account, I wrote by P&L. 1 lakh. Got it? After that, DRR investment should be 15%. Do 10 lakh into 15%. 1 lakh 50. Check our DRR investments. Correctly, it's there for 1 lakh 50. So I don't have to do anything. Now, can I start with redemption? Can I start with redemption? For redemption, I need to sell my DRR investments, realize the money, then settle my debentures. Before selling my DRR investments, I'll receive interest. I'll receive interest. When did I last receive interest? 31st December. When am I selling these DRR investments? 28th of February. Compute interest. 1,50,000 into 4% into 2 by 12. 10,000 or 1,000. 1,50,000 into 4% into 2 by 12. 1,000. Bank account debit to interest on DRR investments. You have written the journal entry. See the second journal entry you written. Bank account debit to DRR investments. Am I right? So in my bank account, I'll write debit side to interest on DRR investments 1,000. And this will go to P&L account. If you want, I can open one ledger interest on DRR investments, but not required. This money will go to P&L account credit side. Got it? After that, now I need to sell my DRR investments. This DRR investments will be sold at par. So I would write here by bank 1,50,000. This ledger stands closed. You have written the journal entry bank account debit to DRR investments. What is that entry that you have written? Bank account debit to DRR investments. In DRR investments, I wrote bank account. In bank account, I'll write 2 DRR investments. 1 lakh 50. Basically, to the opening balance of 9 lakh, you'll have two receipts. One, interest on your investments. Two, sale of your investments. And there'll be two payments. One, interest on debentures and settlement of debentures. So, two receipts, two payments, and balance carried out. That's how your bank ledger will get closed. Now we've sold our investments. Shall we settle our debenture holders? Before I redeem debentures, I should pay interest. Shall I pay them interest? Compute the interest on 10 lakh rupees. Compute 6%. How much do you get? 60,000. That is for entire year. We last paid interest on 31st of December. We are doing redemption on 28th of February. 2 months interest. 60,000 into 2 by 12. 10,000 interest. Expense or income? Expense. So debit interest, credit, bank. Bank ಏನಕ್ಕೆ credit? Because money is to be paid. Debenture interest account debit. Debenture interest account debit to bank account. Debenture interest account debit to bank account. 10 lakh, that is 10,000 into 100 into 6% into 2 by 12. How much do we get? 10,000. Got this? In our debenture interest account, I have written two bank account. In bank account, I would write by debenture interest 10,000. By debenture interest 10,000. 10,000 debentures into 100 per debenture into 6% into 2 by 12. Did everyone get this? So I have paid interest. Now I am ready to redeem my debentures. Shall I redeem my debentures? Look at the debenture ledger. Hey, entry was also same. Did you observe this entry? This is the entry that we just did now. What did it say? Debenture interest to bank 10,000, 10,000. It is transferred to P&L. Shall we transfer it to P&L? Come to debenture interest ledger. This 10,000 is there, no? P&L, tada, by P&L 10,000. You had written the entry P&L account debit to debenture interest. Done. Now shall I redeem my debentures? Debenture account ಗೆ ಬನ್ನಿ. How much is debentures? 10 lakh. This has to become 0. Am I right? So I'll transfer this to debenture holder account. I'll write to debenture holder 10 lakh. This ledger stands closed. I won't straight away write debenture to cash or debenture to bank. No. Debenture to debenture holder to bank. So in debenture account, I've written to debenture holder. In debenture holder account, I'll write by 6% debentures 10 lakh. Did I write this? But can I pay only 10 lakh to them? No, they want 101 rupees per debenture. This is 10,000 debentures into 100. I need to pay them 1 rupee more. That 1 rupee more, I would write here 28th of February by premium on redemption of debentures. 10,000 debentures into rupees 1 per debenture. 10,000 debentures into rupees 1 per debenture. How much is that? 10,000 rupees. 10,000 rupees? Pakka? Everyone? No doubts. In my debenture holder account, I have done by premium. In premium account, I'll write to debenture holder. Check the entry that you wrote. You wrote 6% mortgage debenture account debit, premium on redemption of debenture account debit to debenture holder. So in debenture holder, I wrote both credits. In premium account, I wrote debenture holder credit, same in debenture account. Pakka. Then we are going to pay money. You have written the journal entry debenture holder account debit to bank. Correct? In my debenture holder account, I wrote here to bank 10 lakh 10. This stands closed. This premium on redemption of debentures stands transferred to P&L. You have written the entry P&L account debit to premium on redemption of debentures. So I've written by P&L 10,000. Over. Last and final entry, cherry on the cake. Close your DRR, transfer it to general reserve. Isn't that the last entry that you wrote? What is the entry? DRR account debit to general reserve. DRR no longer required closed by transfer to general reserve. 1 lakh. Ta-da. Got this? So to begin with, 6% mortgage debentures account. We had 10 lakh debentures. We no longer have it. It stands redeemed by transfer to debenture holder. DRR, we had opening balance of 50. It was not up to 10%. So we created another 50,000 to make it come till 10%. And then we transferred it completely to general reserve once the debentures are redeemed and it is no longer required. TRR investments accounts. We had it worth 1,50,000. We sold the TRR investments to redeem debentures. Bank account, we had opening balance. We had two receipts. One receipt is interest on TRR investments. Second one is sale of TRR investments. We'll have two payments. One is debenture interest. Other one is our debenture holder payment. How much did we pay? Nominal value 10 lakh, premium 10,000. 10 lakh, 10,000 I paid. Identify the balancing figure here. 9 lakh, 10 lakh 60, sorry, 10 lakh 51 minus 10 lakh 11. How much? 40, 31,000 is the balancing figure. That stands there as balancing figure. Balance of cash. And debenture holder account, we were supposed to pay them 10 lakh nominal value, 10,000 premium. I paid 10 lakh 10. Premium, I paid 10,000 premium. I transferred it to our P&L, assuming that the provision was not made. Debenture interest, I paid 10,000. I transferred 10,000 to P&L. And that's it. Ta-da! Come on, let's now solve illustration number 2 from Redemption of Debentures. This is our study material question. And let's see, what do they want? Following balances appeared in the books of Paradise Limited. You are required to prepare the following accounts. They have not asked for journals. They've asked you to prepare debenture account, DRR investment account, bank account, and debenture holder account. We will, however, prepare premium on redemption of debentures account, debenture interest account as bonus, gift, free. Okay. Then I will not do ledger straight away. I'll first teach you how the journal entries flow should be for these items, just for our reference to ensure that conceptually we have the clarity what we're going to do in ledgers. Then you pause, you write down the journal entries. Then I'll start with ledger postings. Okay. Read. 12% debentures is 7,50,000. Remember, 10% of the nominal value of debentures to be redeemed has to be maintained in TRR. 10% of the nominal value of the debentures to be redeemed has to be maintained in DRR account. To 7,50,000 into 10% comes to 75,000. We have DRR only of 25,000. I have to further create DRR of 50,000 because I want DRR to be 75,000. I have DRR of 25,000. 75,000 minus 25,000 is 50. Shall I create DRR for 50? I will debit our profit and loss account. We can use general reserve also if we have. Credit will be debenture redemption reserve. 50,000 DRR created. How did we get this? 7,50,000 into 10% minus 7,50,000 into 10% minus 25,000. Is this right? Okay. After this DRR being created, then we'll check DRR investments. How much should be our DRR investments? 7,50,000 into 15%. Come on, take your calculator to 7,50,000 into 15%. 1,12,500. Congratulations. We have DRR investments of 1,12,500. We don't have to invest further money. What if it was 1 lakh? I would have made investment of 12,500. I would have written DRR investment account debit to bank 12,500, 12,500. DRR investment is there. Very nice. See, these balances are opening as on 1st of April. What date? 1st of? They've told annual contribution for DRR was made on 31st of March. Okay, no problem. On 31st of March 2022, balance at bank was 7,50,000. Okay, journal entry, we don't care. If you were doing ledger, I would have written this on the debit side as opening balance. Then, before receipt of interest, ignore. Before receiving interest only, obviously. Investment was realized at par. Redemption of debentures is at premium. We will sell investments at par. 1,12,500 is par value. We will sell at 1,12,500 only. But debentures will be redeemed at 10% premium. Debentures is 7,50,000. We will pay them 75,000 more than 7,50,000. Meaning we will actually pay them 8,25,000. How much will we pay? 8,25,000. 7,50,000 nominal value plus 75,000 premium together up to 8,25,000. After this, that's it. Question is over. When are we doing this? Yeah, 31st of March 2022. When is the opening balance given on? 1st of April 2021. So one whole year we would have to compute interest. Question number 1 was 2 months. We opened on 1st of January, 28th February redemption. Here, opening of accounts is on 1st of April. Settlement is on 31st of March. I need to first record interest income. on my DRR investments for 1 year. Then I will sell my DRR investments. Then I will pay debenture interest for 1 whole year. Then I'll redeem my debentures at premium of 10%. Shall I do that? How much is my DRR investments? 1,12,500. Compute 10% interest on that. 11,250. I will receive so much money as on 31st of December. Everything's happening on 31st of March. Bank account debit to interest on DRR investments. 1,12,500 into 10%. Should I write into 12 by 12? No. I'll write 11,250, 11,250. This is my income. Now, shall I sell my investments? Shall I? Come on, let's sell our investment. Bank account debit to DRR investments. 1,12,500 sold at par. Sold at par. I have sold my investments. I have received interest. Now I have to start settling my debenture holders. First I'll pay them interest. Then I'll do redemption. How much interest? 7,50,000 nominal value multiplied by 12%. For how many months? 12 months. If you want, you do into 12 divided by 12. No, if you have too much battery in your calculator, you do that. Interest is expense. Debit interest. It should be paid. Bank balance will go down. Credit bank account. What do we get? Yeah, it is 7,50,000 into 12%. How much is it? 90,000, 90,000. Got it. Thank you. Then transfer this to P&L. P&L to debenture interest. 90, 90. Actually, we can pass one entry for transferring this interest also. 11,250. Can I pass one entry for that also? Just to make you feel not left out. Are you getting what I'm trying to tell? That interest income received, no, that also I'm transferring to P&L, but their interest is entry is slightly different. Interest on DRR investment account debit. Which what it auto correct? Profit and loss. 11,250, 11,000. Sari hoಯ್ತಾ? Being interest on DRR investments transfer to P&L. Transfer to profit and loss account. Yeah, that is also transferred. This is one entry extra. Even if you don't write this entry, it's okay. We have paid interest on our DRR, debentures, payment expense over. Now, our debentures are ready for redemption. Shall we redeem them? Debit debentures at nominal value. Debit premium on redemption of debentures. Credit debenture holders. Everything's happening on the same date, 31st of March 2022. How much is 12% debentures nominal value? 7,50,000. I am also going to debit premium on redemption of these debentures. I have to pay 10% premium. They've told very clearly. Debentures are to be redeemed at premium of 10%. Do 7,50,000 into 10%. How much do we get? Okay, I will credit my debenture holders to the extent of 8,25,000. Got it? Shall I pay them? Entry for payment is debenture holder account debit to bank. 8,25,000, 8,25,000. That is 7,50,000 plus 75. This premium, if it is already debited to P&L by booking loss on issue of debentures, good. If not, now I have to write the entry P&L account debit to premium or redemption of debentures 75, 75. Final closing entry. Guess what is it? DRR, what was always maintained, is no longer required because debentures are redeemed. We will transfer our DRR back to general reserve. Oh, you are telling general reserve. Fine. How much DRR was there? DRR was there to the extent of 25,000. We created DRR for 50,000. This is to maintain DRR at 10% of 7,50,000, which is 75. DRR was already there for 25. We created DRR for 50. 50 plus 25, DRR is 75. 75,000 of DRR, which is already there, is now no longer required. Shall we reverse the DRR? In order to reverse the DRR, I will debit DRR and I'll credit. That's it. Come on, let's write. I would write here DRR debit to general reserve. How much? 75, 75. Ta-da! Accounting entries are over. Once you understand and copy this, we'll do ledger. Now let's do ledger accounts. To begin with, first see the balances. 12% debenture account. There is opening balance of 7 lakh 50. In 12% debenture, credit side I'll write buy balance brought down 7 lakh 50. Then in DRR, balance is 25,000. I will go to DRR account, credit side I'll write balance brought down 25,000. Then in our DRR investment account, 1,12,500. I would write in DRR investments, debit side 2 balance brought down 1,12,500. Interest rate is 10%. Then annual contribution DRR, all the stories we know. 31st of March 7 lakh 50 by before receipt. This 7 lakh 50 is balance in bank. So I would open one bank account. On the debit side I'll write balance brought down 7 lakh 50. Finally, we know that DRR investments are sold at par. Debentures are redeemed at 10% premium. This is happening on 31st of March 2022, that is year end. Step 1. Check whether DRR is at 10%. 7 lakh 15 to 10% is how much? 75,000, but it is only 25. What to do? Create further DRR. Right by P&L. How much? 50. Okay. DRR is created. In debenture redemption reserve account, I have written by P&L 50,000. In P&L, I would have written debit side to DRR, but we are not preparing P&L account. Yeah, skip that. DRR investment should be 75%. Sorry, 15%. Check 7 lakh 50 into 15%. How much do we get? 1,12,500. See DRR investments, it is there at 1,12,500. Sufficient DRR investments are there. I don't have to buy additional DRR investments. Got it? Now let me go for redemption. Before I go to redemption, I should sell my DRR investments. Before I sell my DRR investments, I should receive interest on my DRR investments, for which the journal entry is bank account debit to interest on DRR investments account. In the bank account, there will be two receipts. One, interest on DRR investments. Two, sale of DRR investments. Now I'm rating interest on DRR investments, which is 1,12,500 into 10%. Months, 12 months. Why? We are doing it from 1st of April till 31st of March. Help me do it. 1,12,500 into 10%. How much is that? 11,250. Investment interest is received. Now let's sell our investments. When we sell it, entry is bank account debit to DRR investments. Entire investments is sold at par. So in bank account, it's a receipt. How much? 1,12,500. In our DRR investments account, I'll write credit side by bank account 1,12,500. This ledger stands closed. So I have sold DRR investments. I received money. Now I am ready to redeem debentures. Shall we redeem our debentures? Before we redeem our debentures, I should pay interest. Shall I pay interest? How much is the interest? In our debenture account, we have 7,50,000 nominal value of debentures at the rate 12%. Please do 7,50,000 into 12%. 7,50,000 into 12%. 90,000. Very good. Shall we pay 90,000? Entry is interest is expense. Debenture interest account debit to bank. In our debenture interest account, I'll write to bank. How much? 90. This is our interest expense. In debenture interest, I've written to bank. In bank account, I'll write by debenture interest. This is payment. I told you there are two things that will come in this ledger. What are the two things? One is debenture interest. Second one is principal plus premium, redemption of debentures. Two payments, two receipts. One is interest on DRR investments. Second one is sale of DRR investments. Two payments, interest on debentures and redemption of debentures with premium. Two receipts, two payments, opening balance, closing balance. Okay. In bank account, I wrote buy interest on debentures. In debenture interest account, I wrote to bank account. This ledger will be closed by transferring this to P&L. I made you write that entry also already. Finally, interest is also paid on debentures. Settlement entry. Shall we do settlement? Come to our debenture account. How much is debentures? 7,50,000. I will close this by transfer to debenture holder 7,50,000. In our 12% debenture account, I'll write to debenture holder. Am I right? In debenture holder account, I would write by 12% debentures 7,50,000. This is not the only thing that I'm supposed to pay. I'm also supposed to pay them premium. Correct? 10%, 7 lakh 15 to 10%, 75,000 also should be paid. In debenture holder account, I wrote by premium. In premium account, I'll write to debenture holder, 75. This stands transferred to P&L. I'll write by P&L 75. This ledger gets closed. Finally, let's pay our debenture holder. Entry is debenture holder account debit to bank, 8 lakh 25. This ledger also gets closed. In debenture holder account, I wrote to bank, 8 lakh 25. Am I right? In debenture holder account, I wrote to bank. In bank account, I'll write by debenture holder, 8 lakh 25. That's all. Then close this ledger. This will have balance carried down. If you observe, the balance is more on the credit side. It is 9 lakh 15 here, 9 lakh 15 here. Tell me how much is the balance carried down? 41,250. This is the ledgers that they've asked. Observe, once again, debentures. 7 lakh 50 was there. It stands transferred to debenture holders because it is getting redeemed. Debenture ledger. TRR. They had TRR of 25. We created TRR of 50 to maintain 10%, which is 75,000. 10% of 7 lakh 50. This is no longer required. So I'll transfer this to general reserve. TRR account debit to general reserve is the entry, 75,000. Understood this? So TRR account only to general reserve. TRR account is also closed. Then come to 10% secured government bonds. This ledger is also closed. We sold TRR investments to redeem debentures. Bank account, there were two receipts. One, interest on TRR investments. Second one, sale of TRR investments. There are two payments. One, debenture holders payment for normal nominal value of debentures and premium. Two, interest on debentures till the date of redemption. Here one whole year. Balance brought down, balance carried down. Debenture holders, we paid them nominal value plus premium. Payable on the credit, paid on the debit. Premium, I transferred it to P&L. If there was provision earlier created and brought on, I would have adjusted against the same. Finally, debenture interest, whatever I paid is expense transferred to P&L. Ta-da! Easy. Come on, guys. Let's now solve illustration number 3 from our study material on redemption of debentures. Start reading. XYZ Limited has issued. Hey, why are we reading the question from the beginning? Read the last line to know what do they want. You are required to calculate the number of shares issued and cash paid for redemption of rupees 20,000 debenture holders. They are not asking you to pass journal entry. They are not asking you to prepare ledger account. They are asking you to compute number of shares that we should give to those debenture holders and amount of money, cash that we should give them. Shall we read the question from the beginning now? Keep that in mind. Start. There are 1,000 debentures which are carrying interest at 12% and nominal value is 100. And each redeemable after a period of 5 years. When are we supposed to redeem these debentures? After 5 years. According to the terms and conditions of the issue, these debentures are redeemable at a premium of 5%. Okay. We will pay them 5% premium. So without forgetting, let's quickly take a note. We have 1,000 debentures. Help me now. What is the value of these 1,000 debentures? 1,000 into 100. 1 lakh. This is the debentures that we have. Cool. Continue reading. The debenture holders also had an option at the time of redemption to convert 20% of their holding into equity shares. So if someone chooses not for cash but for equity shares, out of their holding, only 20% will be converted into equity shares. For example, let's say Kevin has 10 debentures. If he chooses for equity shares, not all the 10 debentures will become equity shares. Whatever is the redemption value of those 10 debentures, of that, for 20% value, I will give him equity shares. For the balance 80%, I will give him cash. Are you getting this? Continue. Equity shares of rupees 10 each at a price of 20. 20 rupees is the issue price for equity shares. You will tell number of debentures to be converted, and that will be divided by 20 rupees per share to identify number of equity shares to be given. And before we divide it by 20, for the nominal value of debentures, I have to first add premium on redemption and then multiply 20% because only that percentage of debentures are eligible to be converted into equity shares. It's going to be fun. This is like word problem that used to do during schools. This is not accounts problem. It's basically English and mathematics. And balance in cash. That though we know. Debenture holders amounting to 20,000 opted to get their debentures converted into equity shares. How much nominal value of debenture holders opted for conversion to equity shares? Very good. Now let me write here. Observe 20,000 opted for conversion. 20,000 is nothing but 200 debentures of rupees 100 each. Why? Divide no 20,000 by 100. What do we get? 200. So 1,000 debentures of rupees 100 each. And in that, which comes to, just to make you feel more comfortable, 1,000 debentures of rupees 100 each, 1 lakh. In the 20,000 nominal value of debenture holders agreed to convert their debentures to equity shares. So who did not opt for conversion or who opted for cash is 800 debentures of 100 each, whose nominal value is 80,000. Now, among this, how much will be converted into equity shares? Only 20%. So you tell me, how much will 20% come to? 200 into 20%. 200 into 20%. 40 debentures. That's nothing but 4,000 rupees. See, nominal value is 4,000. Debentures are redeemable at premium. How much premium? Premium of 5%. So add premium of 5%, which comes to 200. 4,000 into 5%. 200. So redemption value is 4,200. For this, we are going to give equity shares. Equity shares nominal value is 10, but issue price is 20. I'll take 20 here. To 4,200 divided by 20, you will get 210 equity shares which are supposed to be issued to these people on conversion. Got it? Balance of 80% will not be converted to equity shares. It has to be settled in cash. How much is that? That's basically 160 debentures, which is 16,000 rupees. Nominal value is 16. Redemption value is plus 5% premium, which comes to 800. So I'm going to pay them 16,800 cash. And this side, whoever is there, no 800. This guy, though, I'm going to pay him 80,000 plus premium 4,000, 84,000 only, obviously. They've asked us how many equity shares will be given to this 20,000 nominal value holders. We are going to give them 210 equity shares. How much cash will be given to this 200 debenture holders? 16,800 cash, 210 equity shares. And that's the answer. Only the highlighted portion is asked in the question. The other part is not asked, but you can still write to get complete clarity. Come on, let's now solve illustration number 4 on redemption of debentures. This is a question from our study material. Ready? Read. Balance sheet of BEE Company Limited. Other than AIFI, unlisted company, NBFC and HFC, don't worry about all of that. Don't even worry about this balance sheet. Quickly come to the end. Sir, we have notes to accounts. Don't worry, ignore that also. At the AGM, it was resolved. What did they resolve? They've passed 3 resolutions. We will pass entries for all the 3. That's what they've asked. Give the necessary journal entries for these transactions. First one, to give existing shareholders the option to purchase 1 rupees 10 share at rupees 15 for every 4 shares held. First, see this, 1 for every 4. That is the ratio. They've told option. Option is right. So the company is giving right shares. What is the ratio? 1 right share for every 4 shares held. Nominal value 10, issue price 50. What are they doing? Right issue. 1 right share for 4 shares held. Nominal value 10, issue price 15. They're saying this option is taken up by all the shareholders. Everyone agreed. Nanak beku. Anta ellaru took the shares. First, let's do the working note. Focus on the working note. If the shares held are 4, shares issued will be 1. Look at the question and tell me how many shares are there. Issued and subscribed capital, there are 20,000 shares. How many shares? 20,000 shares. If you have 4, they'll give 1. If you have 20,000, 20,000 into 1 by 4. 5,000 right shares will be given. All the shares have been subscribed. Nominal value 10, issue price 15. Nominal value 10, issue price. Come on, let's write the entry. Journal entry will be bank account debit. How much did you receive? 5,000 share applications into 15 per share. How much is that? 75,000. We can write straight away to share capital, but I will choose to write it through application. I'll write equity share application account. Same 75,000 applications received. Then, yeah, you can. We now transfer from share application. We'll transfer 75,000 to share capital. But you got to be careful because these shares are issued at 15. Nominal value is 10. There is 5 rupees premium which stands transferred to security premium. I'll credit security premium also. 5,000 shares into 10, 50,000 will go to share capital. 5,000 shares into 5, 25,000 will go to security premium. I hope you understand this part. So right now the right issue is being made. Our share capital has increased by 50,000. First resolution entry is done. Shall I go to the second resolution? See what is the second resolution of the company. To issue one bonus share for every 5 shares held. If you hold 5 shares, they'll give 1 share as bonus. How many shares are there in the company? 20,000 was there. Just before bonus issue, you yourself made right issue of 5,000 shares. So what is there in the balance sheet? 20. What you just issued 5. Together there is 25,000 shares when you're doing bonus issue. How many shares are there when you're doing bonus issue? 20,000 shares from the balance sheet and 5,000 right shares. So we are going to apply the ratio of 1 share as bonus for every 5 shares held. If you hold 5 shares, they are going to give 1 share. If you hold 5 shares, they're going to give 1 share. How many shares are there? We have 25,000 shares. Sir, how is it 25? 20,000 in the balance sheet, 5,000 right shares. Together it is 25,000. Please do 25,000 into 1 divided by 5. 5,000 shares. How many shares? 5,000 bonus shares are to be given. How much reserves is required? 5,000 into nominal value 10 hai na? Yeah, 5,000 into 10. We need 50,000 rupees. How much money do we need? Where do we start with? CRR, capital reserve redemption reserve, not cash reserve ratio. We start with capital redemption reserve. Do we have CRR in the question? Illa. Next, security premium. Is there security premium? Yes, it is there. You just now you wrote the entry security premium 25,000. Yes, sir, I forgot. Then forget 2 marks. You would have to use security premium first 25,000. Okay, I'll complete my working note. You would have to use security premium 25,000. You still need 25,000. What do you do after security premium? Capital reserve. Do you have capital reserve? No. There is only P&L. But after capital reserve, you'll go for, is there general reserve? No. So you will take from P&L. Do you have enough in P&L? How much do you want? We have 1,20,000. I need only 25. I'll take only 25. So we have 50. Okay. I've taken 25 from security premium, 25 from P&L. Together I have 50. Together I will debit these two reserves, security premium and P&L. Security premium debit 25, P&L debit 25, 2 bonus to shareholders 50. Got it? Then I'll debit bonus to shareholder 50 and I am going to credit my equity share capital account 50. Got this? Bonus to shareholders to equity share capital 50. Bonus issue entries are also over. By this, I've done with the second point, point B in the resolution. This is done. Shall we see the third one? Third one is to repay debentures at 3% premium. They want to repay debentures at 3% premium. But before redemption of debentures, ERR should be maintained at 10%. ERR should be maintained at 15%. First, we will check those two. Then we will redeem our debentures after selling DRR investments and then close our DRR by transferring it back to general reserve. I'll repeat. Before redemption of debentures, point number 1, check if debenture redemption reserve is maintained at 10% of nominal value. If it is there, good. If it is not there, create. Debenture redemption reserve investments could be made at 15% of nominal value of debentures. If it is there, good. If it is not there, you create it. Then you sell debenture redemption reserve investments, use that money to redeem debentures. After redemption of debentures, DRR which is no longer required because the debentures are redeemed will be transferred back, not to P&L but to general reserve. In between interest, if there is date information, also do interest adjustment. Luckily, in this question, they have not given any dates. So we don't have to do any interest adjustment. Is that okay? Now, first come to the question and spot how much is debentures. 12% debentures, 1,20,000. Do you see any DRR? No. We have to create one. How much is 1,20,000 into 10%? Shall I create 12,000 DRR? I would write the entry profit and loss account debit to debenture redemption reserve 12,000, 12,000. DRR created 12 lakh into, sorry, 1,20,000 into 10%. Now, of this 1,20,000, 15% has to be DRR investments. How much is 1,20,000 into 15%? 18,000, there should be DRR investments. Do you see any DRR investments? I don't see any. So basically, they don't have any DRR investments. Shall we make DRR investments to the extent of 18,000, which is 1,20,000, nominal value of debentures into 15%? I would write the entry. Investments are purchased. So investment account debit. Credit will be bank because I'm going to pay. It will be 18,000, 18,000. 1,20,000 into 15 year, 1,20,000 into 10 year. I have created them. Now I will start redemption. In order to redeem, I need to first sell my debenture redemption reserve investments and I'll also redeem my debentures. I'll write 12% debentures account debit. How much is my 12% debentures? 1,20,000. Ready for redemption. We need to pay them premium also. They've told in resolution number 3, premium is 3%. Premium is expense. I will debit premium on redemption of debentures. How much is this? 1,20,000 into 3%. 3,600. I will credit this to debenture holders 1,23,600. So I need to pay 1,20,000 for nominal value, 3% premium on 1,20,000, which is 3,600, which is an expense. So I am debiting it. So on the whole, I am supposed to pay 1,23,600 rupees to my debenture holder. Before I pay, I will sell my investments. Can you pass the sale entry before this? Yeah. One entry up and down is fine. Shall I do the sale entry? Bank to DRR investments. Because they have not given any information, I am assuming that these DRR investments are sold at par. This is kind of nonsense. I just purchased and I am selling. Usually they should have had it. They would have had it. Unfortunate, the question is testing our ability regarding the provisions and our memory. So we are buying, we are selling. Let's sell. Same 18,000. DRR investment to bank I purchased. Bank to DRR investments I sold. Did I make any profit or loss? No. We purchased on the same day, sold on the same day. Weird but true. Shall we pay our debenture holders 123,600? I'll write debenture holder to bank 123,600, 123,600 payment. And this premium on redemption of debentures 3,600 has to be transferred to P&L. I'll write that to be transferred to P&L. If you assume that it's already, what do you say, created, then you don't have to do it. If not, you might have to do that entry also. This is an optional entry, but I'll however still make you write the same. The entry will be, this is not the one. The entry will be, here we have written premium debit, no? I would write profit and loss account debit to oh my god, I made a mistake. Sorry. How much is that premium? 3,600. So nice of you. Being premium transfer to profit and loss account. Done. Last entry. That DRR what we created is no longer required. Reverse it by transfer to general reserve. How much DRR? We only created everything. There was no DRR. We created 12,000. I'll write DRR to general reserve. How much? 12,000, 12,000. Ta-da!